It seems like everywhere you look these days, FX trading is the way to make money. Videos of flashy lifestyles, freedom to work from wherever you want to, as well as making easy money. But more importantly, is FX trading halal and permissible in Islam? And this is what I'm going to cover in today's video. The short answer is no, it's not permissible. But when it comes to anything, especially finance and where your faith is involved, it's important to know the background and rationale for decisions so that you can apply it yourself and increase your own knowledge. So let's get started with today's video. Firstly, what do I mean by FX trading? There's different reasons why you might want to exchange currencies. You might be going on holiday and you obviously will need the currency used in your destination. You might be a large multinational company, and to manage your profits, especially when receiving revenue from different places around the world, you hedge your currency so you can know in advance what the FX rate will be. And the last one, which is the topic of this video, speculating on movements of FX rates around the world and aiming to make money from positive movements in your favor. The foreign exchange market is where currencies are traded, and this market is open 24 hours a day, and due to different time zones, open almost for 6 days a week. As such, the Forex market can be highly active at any time, meaning you have the potential to make money all day long. What you'll be doing when engaged in FX trading is selecting a pair of currencies such as USD Euro or GBP Yen and speculating if one of those pairs will either go up or down in their FX rate against the other currency. So if trading USD Euro, you'll perhaps be wanting the euro to go up against a dollar, or perhaps the dollar to go up against the euro. Once the FX rate changes in your favor, then you'll decide to sell your position and take the profits. Now, I've already said FX trading is not permissible in Islam, but from that description, it doesn't really seem like there's much that could go against the principles of Islamic finance. But there actually are quite a few things which FX trading has that makes it impermissible, and I've categorized them into 3 points, with the first one being the involvement of margin. Now, before I started working in the financial industry, I didn't really pay attention to the world of finance. I didn't know what was happening in the markets. I didn't know what the biggest companies were. And I certainly didn't know anything about any stocks or their prices. So when I first joined, it surprised me that the changes every day were tiny. How in the world are people making money off movements which are literally hundredths of a percent? Just to show you how small of movements I'm talking about in the FX market, looking at the past 30 days for USD dollar to euro FX rates, the movements over the course of the month has only been 1.5%. And even when I zoom out to an entire year, it's even less at 1.27%. These tiny movements are what people are trying to make money off. As a result, because the movements are so small, you don't measure it in percentage terms of 1% or 2%. You measure the movements in hundredths of a percent. Specifically, this measurement's called bips. Once I understood more about the industry, I realized how people make money. They're not dealing with hundreds of dollars or thousands of dollars, but in hundreds of thousands of dollars every single day. And so those tiny movements can generate a large profit if you're dealing with those quantities. The markets generally, at best, move a few bips every day. And since retail traders like you and me don't have hundreds of thousands of dollars of their own to trade with, you have to borrow money. And this is what margin is. The FX broker you use lends you money on margin. A margin account is a brokerage account in which the broker lends the investor money to buy more securities than what they could otherwise buy with their own money. Now, of course, this isn't usually lent for free. You pay interest on the amount borrowed, and this is the first reason why FX trading is not allowed, the involvement of interest. Whether you pay interest or take interest, both actions are impermissible in Islam, and interest, or riba, is probably the most known concept of Islamic finance. And when it comes to debating if FX trading or any other transaction is Sharia compliant, riba is always the first point that's looked at. However, whether something is permissible or not in Islamic finance goes beyond just riba. It is possible to get 0% interest loans. So if that's the case with your FX brokerage platform, does that make FX trading halal? Well, loans are permissible in Islam, but the answer, if that makes FX trading halal even with 0% interest, the answer is still no. This is because you're not allowed to buy and sell at the same time. A person cannot lend you money to purchase something which he is selling to you at the same time. Essentially, there should not be any conditions attached to the loan. Trading platforms will lend you on margin, but you are obligated to only utilize that money on their own platform for FX trading. You can't use that money to go to another platform and trade, meaning there is a condition attached to the loan. So that's the first point to understand when it comes to FX trading and its permissibility in Islam. Margin gives a rise to two impermissible tenets of Islamic finance, riba and a condition attached to a loan. So my definition of risk is quantifying uncertainty, and everything in this world has uncertainty. As a result, having risk in a business transaction isn't something that's necessarily bad, and it fits perfectly fine as part of Islamic finance. One of the examples of FX trading that was mentioned earlier was going on holiday. When I go on holiday to Germany, the pounds that I exchange for euros also involves the risk of ownership transferred. Something could happen to the pounds or euros, and I have the risk of holding euros, and the Bureau de Exchange has the risk of holding the pounds. Also, no additional risk was created here since the currency in circulation has remained the same. However, in business, additional risk will always be created whenever you do a new project or a new deal. But FX trading is seen as speculation akin to gambling, and this is where Islamic finance has a problem with it. When it comes to FX trading, you're creating a large amount of risk without any prospect of creating value, and this is the issue with there being excessive risk in FX trading, or as it's known as al-Maisir. For risk to be justified in Islamic finance, there has to be value for the economy. Another example that was mentioned earlier was a company managing its foreign exchange transactions in advance by conducting FX trading. Here, there is value. The company is sensibly managing volatility in the transactions it's involved in. This will assist the company in managing its revenue, in helping it being a more stable, well-managed company, which is also beneficial to its employees. Wealth is given from God, and this gift has to be utilized via the rules prescribed for it. Money can make a lot of people greedy, and a lot of the times quick money can be made by taking advantage of misfortune, such as hoping the economy of a country goes down. But Muslims have to utilize the gift of wealth for the betterment of society. FX trading has no inherent value. You're speculating on exchange rates going up and down, and that speculation has a negative impact on people of that economy without creating any value to that economy in any trade or production. The last category I want to look at when it comes to FX trading and how it fits into Islamic finance is via ownership. In Islam, you have to own what you're selling. When it comes to traders dealing in GBP euros or USD yen, you don't own the euros, the dollars, the pounds, or the yen. It's not like when I was going on holiday and I actually own the euro. All you have is just a position in the market. But why does ownership, or lack of ownership in this case, make FX trading impermissible? A big reason for ownership in Islamic finance is that when you have a stake in the ownership, you care about whether something succeeds or not, and most likely you'll try your best to make it succeed. All too often you find large banks lending money to small businesses. Now, if the business does well, everyone's happy. But when the businesses don't do well, the bank doesn't care. It's still going to get paid either way. And this is what Islamic finance wants to avoid. The person with power getting stronger and the person who has no initial power becoming weaker. Islamic finance wants the risk of success and failure to be taken by everyone involved, and the only way for that to be possible is via ownership. When it comes to FX trading, you're essentially betting on a country's currency. You have no interest in what happens to the people in that country, and in some of your trades, you're going to hope something negative occurs to that currency, which of course will have a detrimental impact to the people in that country. This is not an ethical transaction, and Islamic finance has ethics at its fundamental core. There's not just a monetary impact to analyze, but an ethical impact as well. And when people, companies, countries focus just on the monetary impact and not the ethical impact, well, I'm sure you can think of plenty of examples of how that turns out. If you want to learn more and develop a good overview of all the concepts of Islamic finance, I've already made a video on an introduction to Islamic finance, which I'll leave next to me. So go check that out, and I'll see you all in the next video.